Over the centuries, accounting has remained confined to the financial record keeping functions of the accountant. Today's rapidly changing business environment has forced the accountants to reassess their roles and functions both within the organization and the society. The role of an accountant has now shifted from that of a mere recorder of transactions to that of the member providing relevant information to the decision making team. Broadly speaking, accounting today is much more than just bookkeeping and the preparation of financial reports. Accountants are now capable of working in exciting new growth areas such as forensic accounting, solving crimes such as computer hacking and the theft of large amount of money on the internet, e-commerce, designing web-based payment system, financial planning, environmental accounting, etc. This realization that came due to the fact that accounting is capable of providing the kind of information that managers and other interested persons need in order to make better decisions. This aspect of accounting gradually assumed to be much more important that it has now been raised to the level of an information system. As an information system, it collects data and communicates economic information about the organization to a wide variety of users whose decisions and actions are related to its performance. This introductory chapter therefore deals with the nature, need, and scope of accounting in this context. Meaning of accounting. In 1941, the American Institute of Certified Public Accounts, AICPA, has defined accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money transactions and events which are, in part at least, of financial character and interpreting the results thereof. In 1966, the American Accounting Association AAA defined accounting as the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of information. In 1970, the Accounting Principles Board of AICPA also emphasized that the function of accounting is to provide quantitative information and primarily financial in nature about economic entities that is intended to be useful in making economic decisions. Accounting can therefore be defined as the process of identifying, measuring, recording, and communicating the required information relating to the economic events of an organization to the interested users of such information. In order to appreciate the exact nature of accounting, we must understand the following relevant aspects of the definition. That is, economic events, identification, measurement, recording, and communication, organization, interested users of information. As you can see that the figure 1 shows the process of accounting. The accounting process communicating accounting information, decision makers that are internal and external users, and then leads to economic events, and then this is the accounting process. Now we come to economic events. Business organizations involves economic events. An economic event is known as a happening of sequence to a business organization which consists of transactions and which are measurable in monetary terms. For example, purchase of machinery, installing and keeping it ready for manufacturing is an event which comprises number of financial transactions such as buying a machine, transportation of machine, site preparation for installation of a machine, expenditure incurred on its installation and trial runs. Thus, accounting identifies bunch of transactions relating to an economic event. If an event involves transactions between an outsider and an organization, these are known as external events. The following are the examples of such transactions: sale of merchandise to the customers, rendering services to the customers by ABC Limited, and etc. An event is an economic event that occurs entirely between the internal wings of an enterprise, example, supply of raw material or components by the stores department or to the manufacturing department, payment of wages to the employees, etc. Move on to the next slide, that is identification, measurement, recording, and communication. Identification. It means determining what transactions to record, that is to identify the events which are to be recorded. It involves observing activities and selecting those events that are of considered financial character and relate to the organization. The business transactions and other economic events therefore are evaluated